I took a long on Thursday on EU at around 9:45 to 9:50 US time. That's around 2 o'clock UK time. 2:50, 2:45, 2:50 UK time. This is during the New York session, and the trade was based on high time frame confirmations. I'll just go over them right now. One of the main reasons being during FOMC, price took out the buy side liquidity that I had been watching the whole week, pulled back into the daily time frame fair value gap below an order block, below this swing on the 240 and 1 hour as well. This is a daily time frame fair value gap, and displaced up with this strong bullish momentum. And I was anticipating a price pullback into this range, find support somewhere within this range. We had that breaker block right there, including some fair value gaps on the 60-minute and also on the 240 time frame. We formed this fair value gap as well, and based on those and the timing of the trade, which came at New York session and also came down to the open and price started to consolidate, was one of the main reasons. I would have liked to enter the trade after this manipulation, so price pushed up first, and then this bearish engulfing candle would have been a better entry for me, because that's something I look for in a trade. So I did enter that trade a little bit early, but still we pushed up to cover liquidity off this high, pulled it back, failed to make a new low, and then we started to displace up, and that was further confirmation that allowed me to stay in the trade. So I exited trade target 1 above these highs, somewhere around this fair value gap, and then I let the rest of the trade run out until this high the next day. And next day we have been consolidating sideways since we've reached that high. Ideally I would want to see the above buy side liquidity taken out, but it's just a matter of how price will get there and when. Reason for entry based on higher time frame is that the order flow has been bullish for me on the higher time frame. I've been anticipating price to come up and take out this buy side liquidity for a while, especially because we pulled into this range, cleared out this fair value gap. September opened, right? This is September's candle. First week, second week we took out the low, held with this pin bar, and then going into this week we've been bullish. And yesterday again, as price has been bullish after rejecting that weekly fair value gap, we've left this bullish fair value gap on the daily time frame, another one on here which price held, and then yesterday before entry we tapped into that daily time frame fair value gap below that order block, obviously in a discount as well. And that was one of the main reasons, especially after we pulled back and put in this bullish engulfing candle on the 240 and pushed up higher. I was anticipating a pullback into this range and then push up back to the buy side liquidity. So yeah, that was the main reason for my entry. We pulled back during after London session, during New York, pulled into discount, held this breaker inside those fair value gaps, inside also a fair value gap that was created on the 240, and price respected that fair value gap as well. And then yeah, we started to find bullish displacement straight after rejecting that level, and that's the trade. Let's see how the rest of it plays out. I want to see whether the buy side liquidity of this high, how it gets taken out, or if it gets taken out. On Friday, price rejected the first buy side liquidity, the first resistance level, and then started to pull back into this range and this fair value gap, also this inverse fair value gap that price had previously formed, and then found support which is below all of this liquidity, right? It formed all of this liquidity first, liquidity pool first, pushed up, took out this liquidity first, pushed up, looked like it was going to continue to that buy side liquidity, failed, pulled down, tapped into this fair value gap, and then what looks like we'll take out the buy side liquidity now. But that's the one thing about taking targets at the most recent resistance level from here, is because if I had targeted the buy side liquidity up there at 1.119, then I would have had to sit through all of this drawdown again on Friday. Again, on Friday, the trade came around the London close, start of London close, right? Comes down, similar approach, comes down, puts in this aggressive bearish candles before a bullish pause, or after a bullish pause, and then pumps up. Ideally, I would have liked to trade it right there with targets, back up to these highs, but because this is quite late in on Friday, it's not an ideal time for me to trade, or what I think is not an ideal time to trade, because there's not a lot of liquidity going on. However, it can be proven wrong at times like this, especially when price comes into the low that it made during the New York session and then holds again with this bullish inverse fair value gap, which is a perfect entry. And this is around 4:30 UK time. I was way too late. Before I took my initial trade, I took a trade as price approached the 50% level of this fair value gap, because to me it was one of the 1 to 3rd fair value gap in a series of fair value gap. Although not in a discount, is something that I was watching, especially because there was a swing low right there, and then that 50% of that fair value gap was right there. And then the way price approached this level with these wicks coming down and this doji followed by this bearish candle, I took a long as price tapped into that 50% right there, and then I exited that trade straight away at the close of that candle. And then price pulled up slightly and pulled back down, because I wanted price to come into that discount and also come into the 60-minute fair value gap. I wanted price to come into deeper into this breaker, and then price comes down there and I take my entry there. Ideally I should be waiting for another move like this to look for an entry, but I'm okay with the first one because of the fact that it does come down quite aggressively on the 15-minute right there after this pulse candle and then holds. So yeah, giving myself enough breathing room. But if I did want to wait for further confirmation, it would be this second low or even the third low, right? Which is the 3 peak pattern that I took on Monday with pound dollar, which I will link to this video. So yeah, that's the trade review.